As you all know by now, there has been a few collapsing banks in the news this past 2 weeks. The biggest one you probably already heard of was SVB Bank, which is a bank most people never heard of until it was all over the headlines. And that is because it's a bank geared towards venture capitalists and the startup tech industry. But I'm sure you have already heard enough about that. Today we are talking about Credit Suisse. I wanted to give you a summary on the current situation pertaining to Credit Suisse and a quick update on a possible resolution. So who is Credit Suisse? Credit Suisse is a global investment bank and financial services firm founded and based in Switzerland. And unlike Silicon Valley Bank, Credit Suisse is considered a global systematically important financial institution with $569 billion in assets as of the end of 2022 and $1.5 trillion under management, and also vastly stricter capital requirements. It's the second largest bank in Switzerland. The largest bank in Switzerland is currently UBS. So how did Credit Suisse get itself in this situation? Well, let's first start by saying the bank has not been ran properly. And I don't mean in the sense that we know now that it isn't ran properly, but that it actually was known as a poorly managed bank. Let me give you a brief history on their management. Just their recent history so you get a better idea of their management woes. They have had scandals about money laundering. And I'm talking they went to court and got found guilty of failing to prevent money laundering. Like this article that says, Credit Suisse leaks unmasked criminals, fraudsters, and corrupt politicians. It details that they have accounts linked to 30,000 Credit Suisse clients all over the world that were part of the leak, and that leak pointed to a widespread failures of due diligence by Credit Suisse despite repeated pledges over the decades to weed out dubious clients and illicit funds, which is not something you want to hear about your bank. They also had a scandal about the company spying on their top executives, which caused the CEO to resign from his position. And in 2021, Credit Suisse lost $5 billion from a private investment firm that went under. The founder of the firm was arrested for fraud. And if you continue to search more about Credit Suisse's past, you will find a lot of articles on their mismanagement of funds and customer information. And here are some other reasons, including the ones I just pointed out.
There are very specific reasons that Credit Suisse is finding itself in this position. You may remember the Greensill scandal. It was caught up in that. There were big issues over Mozambique, its investments there. It was also convicted in last year, in the summer of last year, of failing to prevent money laundering. It unveiled a big turnaround plan. It announced a $4 billion loss last year. Speculation clearly over its financial health, whether it could meet those repayments, whether it could meet those loans. And now just the latest suggestions in its delayed company report that it was reporting of material weakness in its financial controls.
But why are they currently in the news? Well, that's because, as this article states, Credit Suisse's biggest backer says they can't put up any more cash. So a quick summary on what happened is that Saudi National Bank, which is Credit Suisse's largest shareholder, said that they would no longer be buying more shares in the bank or provide them with any more money. They listed a few reasons, but their main reason was that they could not go above 10% ownership in Credit Suisse, citing that it was a regulatory issue, since they currently have a 9.88% stake in the bank, and any more purchase would put them above the 10% mark. Trading in the Swiss bank's shares were halted late morning as they started to crash, but look at their share price history. They currently trade at $2.60 a share, but they are down since inception by 89%, and their shares have been dropping consistently since 2007 to what they are now. After all this happened, a lot of people thought this was the continuance of the domino effect caused by SVB Bank, but this is different. I know saying this time is different is a scary thing to say, but in this case, and even in SVB's case, it kinda is. The companies were both mismanaged. In the case of SVB, by the investments they chose, and Credit Suisse, well, as simple as terrible management. Interest rates and the current market conditions sure don't help, but they have a lifeline. Earlier today, Swiss regulators offered Credit Suisse a lifeline, saying they would provide liquidity to Credit Suisse Group AG if necessary, offering a lifeline to the lender hard hit by concerns over its financial health. They're obviously trying to prevent what they believe could be a banking crisis in the US and hoping it doesn't spread to Europe. If anything else, they're trying to prevent a definitive bank run on Credit Suisse if people do not trust the banking industry. Now for the bigger update, which is this article that reads, Credit Suisse to borrow up to nearly $54 billion from Swiss National Bank. That's right, they got a bailout from the Swiss National Bank, which is similar to our Federal Reserve. The latest steps will support Credit Suisse's core businesses and clients as Credit Suisse takes the necessary steps to create a simpler and more focused bank built around client needs. What are your thoughts on the bailout? Do you feel like it was the right thing to do? In Europe, this would be classified as a bank that is too big to fail. So maybe it was the right call, especially to keep people trusting banks and prevent a bank run, but also to keep it a bank with over 50,000 employees running. This could open up the bank to more regulation, making it safer. It hasn't been ran very well. So if the bank can be saved and keep people working while also maintaining trust in the banking system, then the next step is to regulate this bank even more and prevent any further disasters. Comment below. Do you believe that these both are independent situations? And by that, I mean the SVB situation and the Credit Suisse situation. Are they correlated? Should the federal government continue bailing out the banks past their FDIC insured payments? In this case, I do think there was a need to help out this bank, but that doesn't mean that they should return to business as usual. This should give the federal government a chance to return trust to the customers and investors. If you found the video informative, give the video a like and subscribe. Thank you for watching and see you on the next one.